And joining me now is Brendan Capstick from Nedbank Private Wealth to give us his take on the market's action. Brendan, thanks so much for your time this afternoon. So some good news coming through, right? The trade truce between China and the US still seems to be intact, with the deadline being pushed to November. Let's talk about how markets are reacting to the move. It still seems like caution somewhat prevails. We're seeing some mixed trading coming through. I guess that could be off of the back of that upcoming US inflation print.
Good afternoon. Thanks for having me. 100% right. I think what we've seen is a very strong performance from the global market on a year-to-date basis, still considering all the volatility. I mean, many of these deals have now been concluded last week, Thursday. As you mentioned, we've got the 90-day extension for the big one, the China-US trade deal, and out to the 9th of November, but also coming on the back of strong US earnings. And that's really been buoyant for international markets and US markets. So on that side of things, the risk sentiment really still strong in markets, even considering the volatility. As you mentioned tonight, the CPI print from the US, and that will give direction to the Fed in September if they cut or if they can hold further. You know, if President Trump doesn't put more pressure on the Fed from that front. But I think all in all, I think we've seen certainty coming back into markets as President Trump's indicated. You know, we don't have gold tariffs anymore. I think that was up in the air in the last couple of trading days, which is a good thing for us as a South African gold exporter. I saw mining and gold production also out today. We're looking positive on that front. So I think all in all, risk sentiment still coming through on markets on our end.
And just zooming in on that inflation print, where are you at when it comes to expectations? I think the last article I read, it showed that economists are expecting inflation to tick higher and perhaps starting to see the impact of the tariffs coming through.
Yeah, again, I think the consensus really is towards that 2.8% number. You know, that will also probably put a bit of pressure on the Fed, you know, from a directional point of view. But as you mentioned, probably there has been some front loading or front buying from various companies as these tariffs kind of rolled out into the end or the due dates. And that is possibly increase some inflation numbers coming through. So we'll wait and see what the print brings. I think it does still offer optionality from a market's point of view. I think the market is still in a decent position, and the Fed has the capacity to cut if that number doesn't come through at a high level.
All right, moving over to some local company news. Sassle out with a trading update, expecting a profit bump, saying earnings could increase by between 85 and 100%. They pointed to a number of factors, of course, including an increase in chemical prices and lower impairments. Markets seem to like the numbers. Last time I checked, I think that share price was up above 6%. Was that update enough to convince you to perhaps nibble on some Sassle at these levels?
Yeah, no, Sassle is a very topical name in our South African market, being extremely volatile. As you mentioned, the EPS up guided to be up between 85 and 100%. So there's a big number coming from a low base still. Shares down 37% on a year-to-date basis, and you know, trading at a low single PE. So volatile name, but it seems that the new management is, you know, controlling costs. You know, the impairments will be better than expected, even in the backdrop of the stronger rand and the weaker oil price. So decent positive news on Sassle. We don't hold it, I think, but I mean, it does seem cheap at these levels. You know, unfortunately, they just seem to score all these own goals from a company's point of view. They also guided that the Sassle, Sassleburg and Secunda operations still are fully impaired from that point of view. But I think if you look at the share price reaction, people are looking at from a valuation point of view at this point, but we don't buy it. We don't hold it for our clients.
All right, let's look at a smaller player. Weaver Fintech posting double-digit growth in both its top line and its bottom line, with its Fintech division really driving that growth. Brendan, is this one you look at? It's really been doing well in that buy now, pay later segment.
Yeah, unfortunately not one I looked at from our perspective, a little bit small in our space. But I mean, from a fintech perspective, just broadly, really exciting area of the market. Not a lot of exposure on the local front for investors to get exposure through. A
Yeah.
couple of names, handful of names that you can invest in. So exciting space, but something that we don't look at from a size point of view.
All right, so let's look at Jubilee. Jubilee Metals finally sealing a deal to sell its PGM operations that are based in South Africa. And we're ditching that unit for about $90 million. And of course, this comes as it plans to focus solely on copper. What did you make of that move? I mean, this is not the first time it's announcing it. It's more of a finalization of the deal, right?
Yes, I saw that deal. I mean, also on the back of Merafi's weaker results and the weak ferrochrome and chrome prices, I think on that front, it's not a surprise for Jubilee to start cleaning up that portfolio, selling down those assets, the chrome assets and the PGM assets. From that point of view, it just highlights the headwinds that spot price and basket price has had from a company's point of view. And logistically, I think they've had headwinds from electricity as well in that on the whole sector to get the products out, of course. So I think as a company, Jubilee, we don't look at it that closely, but I think we've seen this right sizing of portfolios across other resources companies like Anglo's, focusing on the copper. So I think that's where really investors and companies want to start playing in the copper demand space.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what your counters, your industry peers are watching closely.
It's down about 15% from its high. That includes a special dividend, but I think it's back into Bible level. Historic price index of about 13. I think that should be closer to about 18 if you take a look at their peers. Their margins are looking better, specifically as they moved into more annuity type software sales kind of thing, and they are in the right sector as people expand their network to cope with the boom in AI. So I think fairly to pretty well or pretty good value at current prices.
Yes, so I guess it's slightly risky given results coming. Standard Bank reporting later this week, in fact. So in the wake of this sell-off, that partially lends credence to it. The market didn't like the Nedbank results. I think the market actually didn't like the EcoBank transaction, despite exiting a long-struggling subsidiary in the rest of sub-Saharan Africa. The pure SA play means the ROE expectation effectively goes backwards because that was an earnings driver for them.
Yeah.
Whereas ABSA has gone in the opposite direction. And one of its two largest markets, Ghana, seems to have made a miraculous recovery in the last year or so. That's off the back of a buoyant gold price and a few of the other commodities which they export. And that bailout, IMF bailout turnaround story has worked out quite well. And ultimately, ABSA expected to be better hedged in the cutting cycle to suffer less from the reverse endowment effect. And that's essentially the difference between what you can borrow and lend as a bank. In the hiking cycle, the banks seem to benefit. And in the cutting cycle, they get the opposite effect. But ABSA is hedged relative to its peers in that space. And I think the space overall is still quite attractive, quite cheap.
So Kweba's going into the banking space with ABSA and Rick is picking DataTech. Just your analysis on those stocks.
Yeah, let me start with DataTech. It's really been a strong performer, up nearly 57% on a one-year basis and still only trading on a forward P of 7.5 times. So providing a brand edge element with tech exposure, which is, as I mentioned, limited locally. Interesting name, we don't hold it, but a really interesting name on that front. Then just on ABSA, probably leaning into my stock pick as well. I think we think the banks are still offering good value from a yield and a price to book point of view. Just on ABSA down 3% on a year-to-date basis, trading at a price to book of 0.9 times, so very cheap historically as well. Of course, new management in line and has guided that the credit impairments will be better. So we do hold ABSA and we do like ABSA.
All right, you like Absa and you're saying that it's leaning into your stock pick. What are you picking today?
Yeah, we're picking Standard Bank Group, SBK, local listed bank, of course. They report results on Thursday. And as I've just alluded to, I think the broader banking industry is still providing good value here. Standard Bank's trading at a price to book of 1.4 times. Quite strong ROE targets, guided between 17 and 20%. So on that front, quality from that point of view, dividend yield around 6.5%, and around 40% of the HEPS comes from the Africa region, and we believe that will be a tailwind in this uptake from FX and a growth point of view. So yeah, we like Standard Bank at these levels, as I mentioned, the report on Thursday, and of course, we would like to be entering at these levels.
All right, thanks so much for your time and taking us through trade at midday, Brendan. That was Brendan Capstick from Nedbank Private Wealth.